Yes, hello, everyone. Good morning, good afternoon, and good evening to you, depending on whatever time zone you are tuning in from. And as always, I'm very excited to welcome you all to yet another promising edition of our Forex Morning Mastery. And of course, in this session, we are going to be delving into how well the assets we are monitoring this week has been doing, and of course, use the historical data we can find from both technical and fundamental perspective to understand the behavioral patterns of market participants, and of course use this information to prepare ourselves for the second half of the week. We have done pretty well so far this week. We have been running, we've been monitoring three financial instruments as usual: the US All Spot, the USDJPY, and of course the XAUUSD. And in fact, the last 2.5 days, we've done fairly well across board. We were able to capitalize on some very good selling opportunities around the US All Spot, and it appears prices continue to go to the downside. Then the USDJPY, we had a phenomenal bearish move at the beginning of the week, and of course the same thing also goes with the XAUUSD, where we took over 200 pips in buying opportunities on Monday before price drop to the downside. And today we are going to be looking at this. We are going to be seeing how we will be managing existing position, and of course strategically position ourselves for the next move. So if you're a fan of the US All Sport, the USDJPY, and of course the XAUUSD, stay tuned in as we are about to delve into some interesting and simple trading setup that will help us navigate the second half of the week. So stay tuned in, everyone. And for those who are joining us for the first time, you're highly welcome on board. My own name is Sheriff Daramola, and I'm going to be your host as I will be taking you on a trading journey to evaluate the financial market from both technical and fundamental perspective. So this is going to be running through for about 40 to 1 hour, depending on how sooner or later we end the session. So I'm very excited to have you on, and feel free to engage in the comment section. I see you, Efat Shikda. I hope I pronounced your name correctly. Good morning to you. Okay, it's afternoon over there. Good afternoon. Very well, thank you. I'm doing very well here. And you say here you want to join on YouTube, but I can't join. Please help me out. Of course, you are already in. The fact that you have commented under this video shows that you're already part of us in this session. So let me know, can you hear me? Can you see my screen? If you can do, you're already part of the session. All right. So with that said, here we will be diving right into the business, and it is our routine to first of all keep ourselves informed about the US dollar market dynamic. Remember, the US dollar is an asset that has a lot to do with all of the financial instruments that we have been monitoring since the beginning of the week. You can't trade the Japanese yen without understanding the US dollar market dynamic. So you can't trade the US all sports and of course the gold commodity without understanding what is really going on around in the sentiment around the US dollar. So we are going to be looking at what is weakening the US dollar at this moment. That is the negative drivers that has been stalling any potential uptrend scenario. And of course, lately there has been cracks in the US economy. If we look at the economic calendar, there's fewer job openings like the JOLTS we saw on Tuesday, April 29, coming in lower than what market had expected. We saw the JOLTS fall to 7.19 million as against the previous month, which was at 7.48 million. And of course, prior to the release of the JOLTS, economists and market participants were already projecting something higher than the previous month. They were looking at 7.5 million, but instead the actual data came in lower than expectation, giving us a negative deviation of minus 1.11, which is not a good signal for the labor sector in the United States. Then we also saw the U.S. consumer confidence just hit a 5-year low. This is the lowest point the consumer confidence report will come in. The actual data, which is not shown here, I don't know why the FX Street economic calendar is not showing it, but from the report we saw, the data came in 86.0, way below expectation. Before we used to see close to 90 or above 90, but this time around it came in below the previous data, showing us that this signals that Americans are spending less and employers are hiring slower. Of course, these are bad signs for the United States dollar. And if you would ask me, based on this and a lot of couple of other factors, the path of least resistance for the US dollar continues to remain to the downside. To add salt to injury, there is rising odds of Fed cutting interest rate anytime soon. In fact, looking at the CME watch tool yesterday night, I think market are now pricing in a 65% chance of rate cuts in June, and as much as 100 basis point in cuts expected by the end of this year. And we all know what that means. Lower interest rate equals to less return for US dollar holders, that is, investors holding US dollars will have a lower return on investors. And what this simply means is that it makes the US dollar less attractive, and this could likely make the dollar continue to spiral to the downside. And if we also look at the trade policy uncertainty, Trump's back and forth on tariff is poking long-term investors who are not really sure whether to continue to hold on to the US dollar or probably drop it at this point. And this is gradually pulling away from US dollar assets as the demand continues to drop. Now, it appears I'm saying all negatives about the US dollar. Of course not. There are also other factors which we can also look onto that might probably help the US dollar to prop up, at least in the short term. Recently, we've seen some short-term buying interest despite the weak US data. US dollar is seeing some brief relief rallies as traders rotate out of the yen or the gold at this moment. And of course, compared to other currencies with their own problem, Japanese yen have weaker data. We saw that report come in yesterday and even last week. Okay, for yesterday, we saw the retail trade data come in at 3.1%, as you can see here, which is below what market had expected, though a little bit higher than the previous month. And then we also saw the retail trade, this also coming in at a deficit of 1.2% from the Japanese economic docket, lower than the previous month, which was pegged at 0.4. So US dollar is still seen as a relatively safer bet in the short term. So how do we prepare for the rest of this week, a week which will also be ushering the new month of May? Of course, we are going to be watching out for some US data today, as they will be playing a significant role around the US dollar market dynamic. So today, Wednesday, April 30th, we are going to be looking at labor-oriented data in the form of the ADP employment change. And this is a data that gives us an insight, or less, that gauges employment in the private sector, and it measures the change in the number of people privately employed in the United States. So generally speaking, a rise in this indicator will probably increase the sentiment around the US dollar. And if we look at the market expectations here, you will see that economists and market participants are projecting 108,000 for the month of April, which is way lower than the month of March, which came out at 155,000. So it shows that the sentiment is not looking positive as regards to the expectations around the ADP, and this may keep the US dollar a little bit shaky for a while before this data comes in. So the timing of this event is 12:15 p.m. UTC. That's about 1:15 p.m. West African time. So we want to be preparing ourselves for that one. We want to see how the market participants are anticipating this event. Then we also have by 12:30 p.m. UTC the core PCE report. It's a monthly report that measures the changes in the prices of goods and services purchased by consumers in the United States. And the core PCE is technically considered to be the Federal Reserve preferred gauge of inflation. And if this data comes in higher than expected, it could show that inflation is coming back up, and this definitely could bring hawkish remarks from the Federal Reserve. Now, from the data we have here, the previous month came in at 0.4%, and based on what is on ground right now, economists and market participants are projecting that the data may likely come in lower than the previous month, that is 0.1%. And it shows that inflation is thinning out in the United States, which further supports the sentiment around cutting interest rate next month. So we look forward to see what the actual data is going to be like. Will it be lower than the expectations, beyond the expectations, or probably just as market had expected? So that timing is 12:30 p.m. UTC. Then simultaneously, we are going to be seeing the release of the GDP for quarter one. This is a data that gives us an insight into how well the US economy has performed in the last quarter, and it comes in percentage. And the data here for the previous quarter was at 2.4% expansion. The US economy expanded by 2.4%, but currently the expectation is that it would not show such magnitude of expansion again. So market participants are looking at a 0.4% expansion for the last quarter. So we look forward to see what that one is going to be like. So what else do we have today again? Okay, President Trump is going to be speaking 3 p.m. UTC and 8 p.m. UTC. So definitely we want to be hearing what he has to say. And most importantly, everyone wants to hear his outlook on tariff and the consequences that may come out of it. So generally speaking, if these numbers come in soft, we are going to be expecting a heavy selling of the US dollar, and if these numbers come in strong, we are likely going to see increased buying in the US dollar. So our strategy is to fade the US dollar in rallies. Look out for weakness at this point in time, especially the expectation is not looking rosy at this point. So we also going to be ready for volatile swings, especially if we are considering end of month positioning as market participants square in ahead of the new month, which is starting tomorrow. So another thing that could also favor or be of disadvantage to the US dollar next month is the Fed cut expectations, which remains sticky at this moment, and the US data will continue to show if the Fed is likely going to cut interest rates or not. So, generally speaking, the path of least resistance for the US dollar remains to the downside, except that we see something significant come out from this economic data. So that is basically the narrative around the US dollar at the moment. So what we are going to be doing now is to go right into the charts and let's see how the market is digesting this information and what are the chances both sellers and buyers have around the US dollar. So the first asset we are going to be taking on this morning, as usual, is going to be the USOILSPOT. And what an interesting situation we have on this asset. Hold on a second. I do want us to see. Okay, so what an interesting situation we have on the USOILSPOT. The market has been nosediving since the beginning of the week, and we were lucky enough to capitalize on that bearish move. And in fact, this morning, I already have a sell position running, and I will be explaining to you why I have decided to sell the USOILSPOT. So let's start our analysis from the execution time frame, which is the 1 hour time frame. So that is loading up, right? Okay, so let's hold on a second. So this is the 1 hour time frame, and for those of you who are part of our live session on Monday, this was what we were looking at. A very simple trading setup where we were able to identify a range bound structure. As we saw the first 10 to 12 hours of the week, we saw price confined within a range bound structure that is between the $63.45 level and the $62.60 level to emphasize the prevailing uncertainty in the market at that particular point in time. And interesting enough, this was happening within our key level, which is right around the $63 area. And remember how we use our key level. As long as price remains below the key level, we definitely want to be looking out for patterns and structures that support selling ideas. And another interesting confluence is this ascending trend line we spotted on the 4 hours time frame, a trend line which has been supporting the bullish momentum for about a month thereabout, I think. So you can see if we go to as far back as the beginning of this month, we saw how that ascending trend line has supported the bullish momentum. And of course, our plan was that if price action breaks out of the key level at the 63 and continues to break out of the resistant line of the range bound structure, we look out for buying ideas. Though we never saw that happen after the live session on Monday. Instead, we saw price break down. I told us all on Monday that we want to see confirmation happen before we jump into that sell, and that was exactly what we saw. Price broke down the support line of the range bound structure at the $62.60 level and simultaneously broke down the ascending trend line. Price came back to retest the structure, and look at what we saw, an engulfing bearish candle. And since that moment, price had continued to drop to the downside, and this gave us the opportunity of selling. I didn't maximize the potential around the structure, as I just had one sell position, had my TP around the $60 area. Remember, I mentioned here on Monday that our TP will be along that second ascending trend line that we have here. So I looked for a psychological level, and $60 mark looks more precise, and that gave about 260 pips in that regard. And since then, we saw price break down that structure, and it appears the momentum is continuing to the downside. And this strong bearish move can be attributed to a weak global economic outlook. In fact, the escalating trade war between the US and China, who are two of the largest oil consumers, is deepening recession fears. And Trump's erratic tariff decisions are a major trigger in that regard. Then we also saw a sharp fall in the US consumer confidence, which I mentioned earlier, where we saw the data coming in lower than what market participants had expected. In fact, it's a low not seen since the year 2020. So this is the lowest point the US consumer confidence has been, and this is inciting worries about the ripple effect of tariffs on job, inflation, and fuel demand. Then yesterday we saw a surprise crude inventory build up. The API revealed a 3.8 million barrels bid up in US crude oil. So let's look at it together here so that we can all be on the same page. So API is usually a low. Okay, let's look at this. Let's filter it in, and so API report, it came in around 8:30 yesterday. Okay, yes, look at it right here. So we saw the API weekly crude oil stock coming in at 3.76 million increase. So what does this simply mean? So when there is increase in crude oil stockpiles, it shows that the oil in the market is too much for the demand in the market. So it was so much that they had to save some. So what this simply means is that demand is dropping, and when demand drops, what does this mean? It means that oil prices will continue to drop because nobody is buying it, and this signals oversupply and weakening demand, and of course it continues to support the downtrend trajectory around the crude oil market. Then we also talked about the indications that OPEC may fast track production hikes in May. And we are about entering the month of May, though the OPEC is having a meeting on May 5th, and with further supply addition being considered for June. So if this is confirmed, this will excavate up oversupply conditions and may likely push price to the downside. And if you would ask me, I am not seeing any sentiment that could favor an uptrend scenario around this area, except for the fact that we may be in oversold conditions right now, technically speaking, and we may see some buy pressure, which could be as a result of a retracement move before the downtrend continuation happens. So I strongly think that the path of least resistance remains to the downside, and that we shall be looking for short opportunities, that is selling opportunities on any form of rally we see here. Now, to help us navigate the market today, I was able to identify a simple trading setup here on the 15 minutes time frame after capturing the character of price action since the beginning of this week. And what you will see here on the 15 minutes time frame is a descending channel after connecting the series of lower highs, as you will see here, and of course the lower lows. I think we have something somewhere around here, so I'll just reduce the thickness so you can see we have a lower low support line, and then we have this one right here. So right now price action is around that lower low, and we begin to notice some buy pressure resume around that area. In fact, I already had a sell this morning with the hopes that this support line will be broken to the downside, but it appears buy pressure is resuming here, and we may see price come into this trend line, respect it one more time to push price to the downside. So I strongly hold on to a bearish bias in that regard. Then secondly, we have a range bound structure, a 50-cent range bound structure, as you will see, between the $59.50 level and the $59 area, just right within the descending channel. So we want to see how the market is going to be playing out around the structure. For those of us who are yet to jump into this position, let's see a breakdown of the $59 area will welcome selling ideas. So you can place a sell stop order below the structure and have enough breathing space for price action to move around. So that means our stop losses will be somewhere above the $59.50 level, which is exactly above the resistance line of that descending channel, and that will be dovetailing to about 50 pips of stop loss. Now what I'm going to be looking at again here is if the price, as you can see, builds up into this trend line, that is the resistance line of that descending channel, and we see that buyers are finding it difficult to break through that structure, that is, we continue to see selling pressure right below the $59.50 level, I will place another sell. And then if you are yet to join, you can have a sell stop below the 59, and then we ride the momentum all the way to the downside, maximizing the potential of that bearish move. So I still strongly hold on to a bearish bias around the structure. And we also need to be very cautious, that is, if oil price hits major support zones, like the $57 area, which is consistent with where price has been in the past, we could see signs of reversal. In fact, around the $59 area here, we could see signs of reversals, but I will not be confident to join a buy unless I see price take out the $59.50 level and this descending trend line. So that will be the only condition for me here to think that buyers are likely taking over the market. And for me to do that, I would like to see price break out of this confluence, that is the resistance line of that descending channel, and the $59.50 level, retest the structure for confirmation's sake. Remember, it's a strong downtrend scenario, and we will need some confirmations to happen before we jump into the buy. And confirmations in the form of retest of structure, continued buy pressure around or above the resistance line of that descending channel, then I would love to join an uptrend move. And please note that as we join this uptrend scenario, it is considered to be a reversal setup. So if we join, we want to ensure that as soon as price moves significantly in our favor, we move stop losses and secure the positions right away, because sellers could come in at any point in time. Now, in addition to that observation is this trend line that we saw broken yesterday. So we saw this ascending trend line. Remember, this is the trend line that we highlighted on the 4 hours time frame. Price broke down of it, and we could see price retrace back into that trend line to continue the downtrend move. So if we at any point in time buy the breakout retest of the $59.50 level, as soon as price moves close to the trend line, about 50-55 pips of price movement, we move all stop losses, secure the buy positions while we wait and see how the market will react to that trend line. Will it break out? If it breaks out, this will further support more buying opportunities. But if buyers find it difficult to break through and sellers continue to persist here, then this will be the beginning of another wave of bearish momentum. So let's please take note of these potentials around this current market dynamics. So like I said, I still maintain a strong bearish momentum. None currently that is supporting. The sentiment is overwhelmingly bearish in the cycle based on both demand and supply side pressures. So let's see how the market plays out. If it breaks out of the resistant line of that descending channel, we are looking at this ascending trend line as an area to see if downtrend scenario will continue or not. So in short, this is a market running on fear, supply glut, and of course policy uncertainty. So until demand expectations or inventory data shows a real change, the sellers are still in control. So please, let's take note of this. And currently my sell position is in a loss of about 35 pips. So I'm still hopeful that we could still see a reverse, a move that will push price to the downside. So let's see how this is going to play out. And of course, I will be updating us on my Telegram platform if anything new comes up. So that is my simple idea around the US All Spot for today. If you have any questions, feel free to let me know in the comment section. So I will take about 5-10 seconds off. Let's see if there are any questions. If you need some clarity, mention it in the comment section, and trust me, I'm here and willing to be of help in that regard. All right. So I guess we are all on the same page. No questions at all, no clarification. So I guess my explanation is quite comprehensible. So ensure you mark out the structures. This is what we are going to be using to help us navigate this market today. And I wish us all the best of luck on the US All Spot. So moving on to the next asset on our watch list. So the next asset we are looking at is the USDJPY. So we started trading the USDJPY last week, and fairly speaking, we did very well. Last week we were able to scoop in some significant amount of profit on both the sell and the buy, scooping close to about 300 pip last week. And of course, we started this week on a very good note as we sold the breakdown retest of that key level at the 143.500, scooping in over 200 pips before the bullish momentum began again yesterday. Now let's look at what led to the bearish idea we took on Monday. So we saw this whole situation where price action during the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 hours of the week, we saw price confined within this range bound structure that is between the 143.900 and the 143 300 area to emphasize the prevailing uncertainty in this market. And of course, we saw here on Monday on our 4 hours time frame a beautiful ascending trend line, which we said we are going to be using to navigate this market this week. So we marked it out. And we said, as long as price remains above it, we'll look out for buying ideas. That is, we want to see price take out the 144.00 area, a level which has been a strong selling niche since the beginning of this month. And we said the only condition that will make us buy is to see the breakout of the structure, which never happened. And we also went ahead to keep our options open. That is, if sellers break down the trend line and the key level, we look out for selling ideas. And with that structure duly identified on our execution time frame, that is the 1 hour time frame, we were opportune to join this bearish bias. So I think I was taken out with about 190 pips on this sell position before yesterday's bullish traction resumed. And of course, you know, I don't trade on Tuesdays and Thursdays. So yesterday I was off the market, allowing the market to do some corrections and repositioning as we gradually prepare for the second half of the week. And of course, this strong bearish momentum we saw at the beginning of the week was thanks to the broadening inflation trend and strong wage hikes in the Bank of Japan economic docket. And of course, this has also given room for the Bank of Japan to tightening their monetary policy, hereby supporting the yen in the long term. And of course, at this juncture, the yen still remains under short-term pressure. Of course, we saw what has been going on here in the last 24 hours, but fundamentals are slowly shifting in the yen's favor as traders are expected to rotate from a risk on fade into the Japanese yen strength trade once the Bank of Japan policy clarity lands, and of course the Fed's dovishness is confirmed. Now, another factor that is supporting the yen here is the US labor data weakness. We saw the JOLTS yesterday. I talked about this earlier. And of course, the consumer confidence, which all came in below expectations. And this has increased the chances that the Feds are going to be cutting interest rates. It has reinforced the bearish outlook around the US dollar, indirectly supporting the Japanese yen. Then if you also look at the Bank of Japan's likelihood to hold steady its interest rate or increase it, this divergent trajectory could cap the upside situations we are currently seeing on the USDJPY. So we need to be very, very cautious as market participants position themselves ahead of the Bank of Japan decisions. And of course, I'm very sure traders, major key players in the market, will be holding back from any strong short decisions around the Japanese yen. And no one will want to be selling the Japanese yen anytime now, especially as the Bank of Japan's announcement comes up tomorrow. Is it tomorrow? Let's check. I think it's tomorrow. Let's look at Thursday. Okay, yes, can you see here? The Bank of Japan interest rate decision is coming up tomorrow. I think about 11 p.m. UTC, that is. So everyone wants to hear if there's going to be an interest rate hike or leaving the interest rate unchanged, which is the huge sentiment in the market right now. So this is going to be playing a significant role in this market. Now, in as much as this is in play, the dollar also has its own good look as well at this point. Currently, we have easing US-China trade tensions. There has been improved trade sentiment around the US-China situation, which obviously has reduced safe haven flow into the yen, and this is evident in the last 24 hours. As you can see, sellers have been finding it difficult to break through the 142.00 area, and this has led to some short-term profit taking activities favoring the US dollar in the short term. Then tariff relief from for US car makers. We had Trump announced yesterday that there will be relief for US car makers and supply chains, especially Canada and Mexico, and this has boosted global risk appetite, weighing further on the Japanese safe haven appeal, and we have seen the dollar increase a little bit in that regard. And of course, the industrial production in Japan, we saw it drop significantly for last month. Let's see what happened here. Why am I not seeing this? Okay, so you can see here industrial production from Japan. We saw it drop to a deficit of 0.3% for the year over year, and for the month over month we saw it drop to a deficit of 1.1%, worse than what market participants had expected. Now this could be a short-term dent to the value of the Japanese yen. So at this point in time, what are the chances that both buyers and sellers have in this market? So personally, I already had a buy position triggered, which I will be explaining to you why I have done that, but I'm very cautious around this buy position. Any form of fade in this bullish trend could incite strong selling ideas. So we shall be looking for fading around the USDJPY rallies, especially around our key level area, which is the 143.500 area. 143.500 area. If US data continues to disappoint, then we could see selling pressure resume again from this particular area, pushing it to the downside. So but if the Bank of Japan backtracks on normalization or US data beats heavily, USDJPY could squeeze and break above the 144.00 area for the first time in about 3 to 4 weeks. Now, to help us navigate this market today, I have a simple trading setup on the 15 minutes time frame, which I will share with you now. So this is what I'm looking at, and what I did here was to take into account the character of price action in the last 24 hours. You know, since that strong bearish move we took on Monday, the market appears to be recovering at this moment. So look at what happened in the last 24 hours. We've seen some higher lows here. Price continue to find higher lows, resulting in that beautiful ascending trend line we just marked out here. So I want to see this as a temporary uptrend scenario, and of course a reversal setup at this point. And you know how we use our ascending trend lines. As long as price remains above them, we want to maintain a bullish bias. So because of this development, I had to buy above this 142.750 with the hopes that price will still climb up and maybe reach our key level, which is at the 143.500. So we are looking at another 50 pips thereabouts if price gets that far. We move all stop losses, secure the current buy positions, and wait to see how the market reacts to that key level at the 143.500 area. And like I said, if the US data beats expectations heavily, we could see the US dollar break out of the key level and continue to find new highs. So I have positioned myself for this bullish expectations. Now, for those of you who are yet to join the buy, well, there are two things that we can do at this juncture. The most theoretical one is to wait for price to either come back, retest the structure that was broken here this morning, and then cite the buy pressure here. That is, if sellers find it difficult to break through, then we can join that uptrend move. Now, if sellers drop below the 142.750, then this trend line could be a bust up that could send price climbing higher. So this is the first scenario that we can look forward to. However, if that is not the case and price continues to find new highs, well, a breakout of this psychological level at the 143 could incite more buying opportunities. So let's mark this level out here, and then let's see if the market will break out, retest the structure. So if it does break out, retest, we could join from that particular point. So let's see, what is my current position running in? Okay, still running with about how many pips? That I think about 10 pips thereabout, I guess. So that is what is still running with, and let's see how the market will play out here. So I'm still hopeful that sellers will come in, but we don't know when it will. So we want to be very, very prepared for it. And I will, of course, update us accordingly on both my TradingView and Telegram platform as soon as I see a setup. I'm going to be on my workstation throughout today. So definitely we will be monitoring the price action around this area. Now, like I said earlier, that the path of least resistance for the Japanese yen is still very strong. That is, USDJPY's tendency to drop is still very high, thanks to the Bank of Japan policy normalization hopes, the Fed dovish tilt, of course, the policy divergence tailwind, and of course, cautious market positioning ahead of the Bank of Japan decision coming up tomorrow. Now, if price does not break out of the 143 and it continues to drop to the downside, I will not be jumping into a sell right away, as I would like to see price break down, retest this trend line. So this trend line here is going to be playing a significant role for us today and tomorrow. So I will not sell unless this trend line is breached and broken to the downside. So I will likely see something like a breakdown retest of the trend line and then sell below it or below the 142.450. But if that does not happen, we maintain a bullish bias and wait to see how the market reacts to the key level at the 142.500 for new trading opportunities. Trust me, I will be updating us as soon as I see something new evolve on the chart. But pending that time, this is what we are using to navigate this market today. Mark it out on your charts, as you want to be using it as a reference point to guide your independent trading decisions today. If you have any questions, feel free to let me know in the comment section. So as always, I will take another 5-10 seconds off. Let's see if there are any questions before we move on to the final assets on our watch list today. Stay tuned in. All right. So in the absence of no questions, I guess we are all good to go here. I trust you've marked out the structures. Let's see how the market will play around them today. And I wish us all the best of luck. So moving on to the final asset on our watch list. So the final asset on our watch list for today is my favorite, and that is the XAUUSD, popularly known as the gold spot. And of course, with what we are seeing on the chart right now, this is a wait and see gold market supported by Fed dovishness and geopolitical undercurrent. Though we have some constraints from improving risk sentiment and a resilient US dollar at this moment, but I will say the indecision is very, very obvious at this point in time as market participants look forward to the major US economic data coming up later this week. Now, before we go into the fundamentals in this market, let's look at what was our outlook at the beginning of the week. What were we seeing in this market? What were the potentials that we saw for buyers and sellers around the current market dynamic? So we talked about the fact that price action hit an all-time record high at the 3,500 last week, Monday, and then on Tuesday we saw a U-turn in price due to Trump's withdrawal of his comments or his attack to the Fed chairman, which gave the dollar a little bit of breather, pushing price back into the 3,260 area. And for those of you who watch my weekend video on the XAUUSD, I did emphasize the fact that market participant keeps looking for buying opportunities around major dips, and as you can see, we saw buy pressure resume from the 3,260 multiple times last week, giving us signs that buyers are still very present in this market. And due to this understanding, coupled with this technical ascending trend line here, as you can see, price maintain its momentum above the trend line, we felt comfortable buying the XAUUSD. So as a result of this, we had our first buy position at the 3,300 just right here on Monday, as you can see here. Then we added another buy position at the break of the $3,331.50 level, which was the resistance line of that range bound structure. And as a result, we saw price move over how many pips was that? 500 pips on Monday. Yes, we saw 500 pips of price movement on Monday. Then we also saw the second buy position move over 200 pips before sellers came into the market, and we were able to scoop in some massive profit from the XAUUSD on Monday. And throughout yesterday, the last 24 30 hours, I've seen the market go through a consolidation, emphasizing the prevailing uncertainty in the market. As you will see, price confined within the 3,031-ish and the 3,300 area, emphasizing the indecision that was going on in the market at that point in time. Now, from the look of things and generally speaking, the path of least resistance for gold still remains to the upside if we look at what is going on behind the scenes. Now, we saw a weak labor data yesterday. The JOLTS came in a little bit lower than expected. We saw a slumping consumer confidence index, which of course shows us that spending has reduced in the United States. And a lower interest rate environment also reduces the opportunity cost for holding non-yielding asset like gold. Then the tension between Russia and Ukraine still persists. The US is threatening to halt mediation efforts. This geopolitical uncertainty could fuel safe haven demand for gold and make gold continue to rise. Now, where will it rise from is what we are trying to figure out at this point in time. And of course, we cannot ignore the Trump's erratic policy shift, which is causing a sentiment pivot away from the US dollar at the moment and benefiting the gold as well in the meantime. But however, despite all of this and the limited US dollar upside potential, the US dollar or the gold commodity has its own downsides too. that is pressuring the gold prices. Now, currently, we saw a surprise increase in rise in global equity markets. And this risk appetite is up due to the US-China trade tension ease at the moment, and optimism return to the stock market as a result of this. And this reduces the immediate need for safe haven asset buys, right? And of course, we also saw a modest rebound in the US dollar. I showed you that on the USDJPY. We saw the US dollar rebound a little bit, but I still think it's a short-term pressure in the meantime. So what are the chances that both buyers and sellers have? Now, as of this morning, I shared with us a new trading setup that we will be using to navigate this market today on the 15 minutes time frame. And before I show you that, let's look at this chart here. So we've seen price break down the ascending trend line, right? The trend line that is expected to support that uptrend continuation that we were projecting at the beginning of the week after price broke down the support line of that range bound structure at the $3,300 area. And so at this juncture, looking for deep buying setup is still a possibility. Now, why is that so? Now, look at this 3,260. It's our key level, right? This is our key level for the week, and in a long-term perspective, buying as long as price remains above the key level remains a condition we are looking for. As we saw, it has a memory for buying power. We saw buy pressure resume from there last week Wednesday. We saw it happen again on Thursday, and the same thing also happened on Friday. And for the fact that price still remains above this major support line still opens up the idea that buyers still have a say in this market. So we are not going to be ignoring the potential of the buyers despite the current sell position we have running in the market right now. So the upside trajectory is still very valid. So we are going to be looking for any deep buying setups near the 3,260, especially if the US macro data, that is the ADP, GDP, the PCE report, and of course the NFP later in the week comes in weak and supports Fed's dovishness. But if the data comes in higher than expected, we could see the 3,260 broken to the downside to incite more selling ideas. So that is where this new trading setup comes in. So I shared this with us this morning. For those of you who are with me on both my TradingView and Telegram platform, this is what I shared this morning after taking into account the character of price action since the beginning of this week. So we saw the highest level for this week at the 3,352. We were part of the strong move on Monday. We were part of the strong move, and since price tested the 3,353 area, we saw price drop to the downside, and this whole consolidation saw something like a lower high, as you will see, lower high, which gave us this beautiful descending trend line you see here, and this has finally led to the breakdown of the $3,300 area, making sellers look stronger, at least in the meantime. So this is what triggered my sell position you are seeing on the screen. So I think the sell position is running with over 100 pips in profit right now. I think I have about $20 using a 0.02 lot size. And for those of you who capitalize on this setup I shared this morning, well done and kudos to you. So it's high time you want to be moving all stop losses. Remember, we are within an uptrend scenario and anything could happen anytime. So I do want to move my stop loss right now. Let me secure some position. As you can see, the last 1 hour 30 minutes I've seen buy pressure resume around the 3,280, which is close to that key level we talked about at the 3,260. So I'm moving my stop loss right now to around the 3,288.400 area. So I've locked in some profit at this moment. And for those of you who are part of this profitable move, let's ensure that we secure our positions right now. Now, what is going to happen today? Are there any chances that some sellers will continue to push price to the downside, or are there any chances that buyers will come in? From a long-term perspective, I strongly believe that buyers will come in, but we don't know when it will happen. But if we cite this buy pressure we are noticing now, let's zoom into the structure. I'm beginning to see a range bound structure evolve right now. So we have a support line here. That is the $3,278.50 level, right? So we have a support line now. This is the lowest point prices for this week, right? And then I have a resistance. So I want to give this a different color to emphasize its importance. So I think this is better. So we give these a different color entirely. So we have 3,290.50 here, 3,290.50. Okay. So we have a range bound structure now. Now, there are two possibilities around this area. It's either price will retrace back into the structure that was broken around the 3,300, or even go to as far as the trend line, where continued selling pressure could push price further to the downside in favor of the US dollar. And this can further be supported by a strong US data today that could push price to the downside. But I doubt if there will be any strong US data today. That is one scenario. Then the second scenario is price may just continue to drop from here and push price to the downside. So if you are yet to be part of this position, you can place a sell stop order below the structure, which I'm going to be doing as well right now. I'm going to be doing that right now. Place a sell stop order there. If you look at the bottom of your screen, you will see placing a sell stop order below that structure. If price breaks down, we want to be adding more sell positions to maximize the bearish move. But if that is not the case, then a breakout of the $3,290.50 level could incite the beginning of another wave of bullish momentum. So I will buy here the breakout routes of the 3,290. And as soon as price gets into the 3,300, I will move all stop losses, secure the buy position while I wait to see how the market reacts to the 3,300. If selling pressure begins here, that is, buyers find it difficult to break through, then it's a down for me, and it will just take out our buy position, maybe at a worst case scenario break even. But if price breaks above the 3,300, this could support the bullish idea. I will not be adding more buy position there because of why? Well, it's simple. It's below the descending trend line, so I don't want to be buying around a trend line area. So I will just maintain the buy from the 3,290. By the time price gets here, we will be running with over 130 pips, and then move all stop losses to secure the buy. And now if price goes ahead to break out of the trend line, then a retest of the trend line will give me a more opportunity to buy. Then a further breakout of the 3,315 will welcome more buying opportunities. So since the path of least resistance for buy for the gold remains to the upside, I think we are going to be having multiple opportunities around the structure. So let's see what happens around this area. So we have a sell position running at the moment. We've moved all stop losses to secure it as price action gradually moves towards our stop loss. As you can see, the last 1 hour 30 minutes I've seen buy pressure evolved around this area. In fact, the last candle here closed in form of a hammer candle, which theoretically means that buyers are gradually coming into the market. So let's see what happens here. I will place a buy stop order above the 3,290.50 to capture the bullish move if it finally happens. So I'm placing a buy stop order there. So let's see what happens from this area. I think I'm going to buy again here because of that. So I'm going to buy here. So I just placed the buy here. The reason why I'm placing a buy here is because of that hammer candle. So I have my stop loss below the support line for that buy. So we're about to be taken out of the sell. So that is basically what I'm doing right now, and what I'm going to be managing this market today. So there you have it, my in-depth look at the gold commodity for today. So let's see how the market plays out, and if anything new comes up, I will definitely update us on both my TradingView and Telegram platform. If you have any questions, feel free to let me know in the comment section. So I will take another 5-10 seconds off while I wait to see if there are any questions before we start rounding off on today's Forex Morning Mastery. All right. I see you, Joe Hakim. Glad to have you here with us. And thanks for that gold medal. I'm wearing it with honor. I trust you are doing very well. All right. So I guess in the absence of no questions, we are all on the same page, right? And hopefully today also puts our portfolio on the positive side like we have begun the week. And I want to wish us all the best of luck. So today we were able to run through the 3 financial instruments on our watch list, and as a result of this session we have about 3 positions running across the assets. We have a sell running on the USOILSPOT, though it's currently running in a loss. We still maintain a bearish bias as the sentiment around the US oil is overwhelmingly to the downside based on the fundamentals we talked about earlier. Then the USDJPY, we have a temporary buy running at the moment, though the market on a long term is looking very bearish. We want to capture this counter trend, and we want to watch out for what happens today from the US economic data, which will let us know if the dollar will rise further or will drop to the downside if the data comes in strong, or depending on if the data comes in strong or weak. Then on the XAUUSD, we also have a sell position which is doing very well at the moment, currently about 80 pips in profit, and hopefully we are going to see a reversal anytime soon that will push growth to another high this week. So we are very cautious. We are open-minded, and through our trading setup today, we've been able to identify the potentials of both buyers and sellers around this current market dynamic. So our options are open. We've had areas where we are going to be selling. We have areas where we are going to be buying. All we just need to do is mark out the structures accordingly, as we have done in the course of the session. Exercise patience and allow these structures to mature. And always remember that every decision we make in the financial market is more or less an educated guess. So with this understanding in mind, let's ensure that we have a well-defined risk management strategy in place. And for those of you who are joining us for the first time, I do hope you were able to gain one or two things from this session. If you did, you want to be part of our subsequent editions, as we come here again on Friday, same time, 8:30 a.m. UTC, 9:30 a.m. West African time, to see how well these assets have done, and of course prepare for another fantastic day, the NFP, and of course that's the second day of the new month, which also has its own volatility. So let's see again on Friday, and hopefully by then we would have made some more profits and hoping to capitalize on that day's session. So I wish us all the best of luck. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.